Gold has just passed the euro as the world's #2 reserve asset. Fiat currencies just got dunked on. Central banks are buying over 1,000 tons for the third straight year. Gold is now a geopolitical hedge, not just a shiny rock. As fiat loses trust, countries are signaling they want real assets in a fake money world. Watch the full video, because when gold moves like this, the entire system is shifting beneath your feet.
Moving on in the 5 things. Thing number 3, we're talking gold. Fiat takes the L, Gary says. Thing number 3, gold passes the euro as the world's second largest reserve asset. Just wow, continuing an absolute tear for gold. Gary, break it down.
Well, Rob, first of all, I love gold. I started buying it in 2020 when it was around 1,500. It's now in excess of 3,400 per ounce, more than a double for us. That's great. Now, for those of you who are thinking that I might actually be Peter Schiff, that's not true. A, I don't have a snazzy beard. And B, the position I have that is much larger than my gold position is Bitcoin, which he despises. So that's up 6 or 7x since we started buying it at 15,000. Anyway, last week, gold overtook the euro to become the second largest reserve asset held by central banks. It now accounts for roughly 20% of foreign reserves versus the euro's 16%, according to the ECB, that's the European Central Bank's 2024 data. There are a couple of things going on there. Part of it is geopolitical concerns, and part of it is a gigantic rally in gold prices. But central bank demand has reached record levels. Basically, central banks own as much as they did in terms of tonnage for back to the Bretton Woods era, for those of you who are economic historians. But because the price has gone up so much, it represents a larger percentage of reserves versus where it was a couple of years ago. Gold is certainly more price volatile than fiat, but it also has more value. The key thing there is it is not anybody's liability. The same can be said for Bitcoin, right? So if you own treasuries, which is the way a lot of central banks own dollars, right? Or they might own, yen, that they don't have a bank vault with stacks and stacks of yen notes or dollar notes. They own the debt of those countries. Well, that's a liability, and that creates a problem. The key thing with gold is it's nobody's liability. Again, same thing in Bitcoin. And then a big part of what's going on are emerging market economies like Poland, Turkey, India, and China having the largest buyers. I saw reports last week that Chinese buying may be as much as 10x what's reported. I have no way to prove that or disprove it, but I find it to be credible. I believe that China is buying huge amounts of gold and probably not reporting all of it. And a big part of it also is geopolitical risk, right? Countries do not want to necessarily hold more dollars or more treasuries. So there's a lot going on right now, but I expect that this trend is going to continue in the next few years. It's not too late to buy gold.
Yeah, and Gary, with the central banks, why are they making this choice? Why are they buying more gold instead of, in the past, more foreign currencies? I think for those of us out there, obvious, but break that down as well. Positioning themselves with more strength in gold.
I think there are 2 things going on, Rob. One is with every major central bank and Congress or Parliament printing massive amounts of their own currency, we're seeing constantly debased fiat currencies. And I think, we're going to talk about this later in this episode. We have DKI Stark intern Samak Jain coming on to talk about inflation, disinflation, deflation. So we're going to be talking about all of that. But the point is that as our fiat currencies, again, a fiat currency is a government-sponsored currency like the dollar, the pound sterling, the euro, the Japanese yen, those are all fiat currencies. And they're all being debased. And so the value of what you own is worth less a year from now. You cannot save in dollars. You can't save in euros. You certainly can't save in sterling. And so, people are realizing, wait a minute, we're going to have a negative return on these. The purchasing power of these assets is going to decrease over time, whereas gold holds its purchasing power. The other thing going on right now is there are geopolitical issues. A place where I've had conflict with other people in say, the FinX community, is I've been warning for years that the BRICS drive toward de-dollarization is something I've taken seriously. A lot of other people have said, oh no, they can't compete with the dollar. De-dollarization isn't a thing. Currencies are still, crude oil is still priced in dollars. For those of you who maybe aren't doing this stuff all the time, BRICS stands for Brazil, Russia, India, China, and South Africa. It is a coalition of a couple dozen countries that are actively trying to get themselves off of the dollar. They've talked about forming their own currency, commodity-backed currency. That hasn't happened yet. But the point is, more than half the world is saying we really don't want to hold these, formerly impregnable, fiat assets. Typically that years ago, everybody wanted to own the pound, and then it was the dollar, and then they would diversify with the euro. But there's a lot of geopolitical risk right now, and one of the mistakes that the Biden administration made was using the dollar as a hammer against Russia, and we stole their dollar-denominated assets. Now, people might say, well, they did it for a good reason. They were trying to protect Ukraine. Well, one, it hasn't protected Ukraine, but what it did was sent a message to the rest of the world that the dollar is unreliable unless you remain in the good graces of Washington, a place that changes leadership every 2 to 4 to 6 years. So when Washington's foreign policy prerogatives change, it's very hard for everybody to stay in step with us. And an increasing part of the world is saying they don't even want to do that. So they really just want off of this. Gold is the asset that you can hold where you don't have to worry about geopolitics. You don't have to worry about somebody stealing your reserves and wiping them out or telling you you don't own them. There's really nothing anyone can do. If you own physical gold, you own money.